The stock market is off to a rocket start in the first month of 2022.
In this video, we're going to talk about what I learned from a full year of active trading and how I lost $15,000.
What's up, Legacy Builders? I'm Rob.
I'm Reshawn, and this is Learn, Hustle, Grow.
She's a stock trader.
He's a realtor.
And we are debt-free investors. If you've been following our story, then you know that at the end of 2018, we left our W-2 jobs, and in 2019, we traveled the world.
We focus on debt paydown and long-term investing in both real estate and the stock market to achieve financial independence. Every week, we're dropping a video sharing our experience in both money and investing. Occasionally, we share our travel experiences.
For those that are new to our channel, we'll give you some background on our trading experience.
Wait, before we do that, go ahead and give this video a thumbs up and subscribe. We are dropping gems at no cost to you.
We are actual students in the Invest with Teri VIP Trade and Travel course.
We enrolled in the course January 26th of 2020. We spent that entire year learning the IWT methodology and studying the stock market. After we recouped our $5,000 investment, we posted our first course review.
After getting DMs asking how it was going, we posted a 9-month update. Turns out there are plenty of people out there looking to trade for income.
So we decided to share our monthly 2021 progress. We'll post links to previous videos and a link to the Trade and Travel course in the description below.
In January 2021, we set an income goal of $5,000 a month.
We chose that goal based on the average Texas income as reported by the U.S. Census Bureau. We wanted to answer the question, can you earn an income as a trader?
Okay, so let's take a look back. Reshawn started off 2021 with a strong first quarter.
This is a screenshot of closed positions from Fidelity Active Trader Pro. In the first column, you see the symbols of the stocks traded.
To get investor information on each stock, check out sites like Yahoo Finance and CNBC.
Your online broker, Fidelity, Schwab, TD Ameritrade, or whomever you use, can also offer some insight.
The second column is the number of shares purchased and sold.
The third column represents short-term gain. Short-term gains are profits from positions held less than 1 year.
Column 4 is long-term gains for positions held for at least a year. You will see here there are none.
Column 5 is the company name or ETF name. These are swing trades taken during the first 3 months of 2021.
Q2 was also a great quarter.
We closed the first half of 2021 $11,000 ahead of our $30,000 goal.
Wow.
We were really feeling good.
Okay, wife, so what was your strategy at this time?
I followed the IWT methodology as a swing trader. I had determined that I had a better opportunity to win if I eased into a position purchasing 20 to 25 shares at a time.
Okay.
This would allow me to average down if I needed to.
Okay, so why did you take this approach?
Okay, really, I was being greedy. In addition to my watch list of about 20 stocks, TradeStation also offers hot lists.
Okay.
These lists share the daily stocks that are up and down.
Okay.
And there were just so many opportunities, I couldn't take advantage of all of them. So in order to be able to do more, I decided to split my money up.
Okay, sounds good, but I got a question. Did the companies on the hot list qualify as the good company under the good company criteria?
Actually, they did. Some of the stocks were even on Teri's broader watch list.
Okay. Okay, so why weren't they already on your watch list, though?
Okay, Teri's watch list has about 50 stocks. And as a new trader, I knew it was better for me to limit the number of companies that I watched on a daily basis.
Okay, do you still believe it's best to limit your watch list?
I do, even more so if you are a swing trader holding positions overnight.
So why is it specific to holding a position overnight, though?
Okay, swing trading provides an opportunity to capitalize on gains as long as the position is moving in your desired direction.
Okay.
And that's up or down. However, if the market moves against you, and gaps in the opposite direction the following day, you can actually lose more than you had planned.
Okay, to clarify, day trades are closed at the end of the trading day, which could leave money on the table, but it limits your losses to that day, is what you're saying.
Correct.
Okay.
As long as you have a margin account, those funds will be available for trading the next business day.
All right, back to your 2021 trading. Your Q3, this is when things took a turn. Tell us about what happened.
This is when I began to struggle to find trades that met my desired risk-reward criteria.
What do you mean?
In July, the stocks on my list were trading near all-time highs, so I decided to hang on to my cash. In August, I jumped into the market trading heavy hitters like Amazon and Tesla.
Right.
However, by September, the market had already begun to start trending downward.
Okay, so once the market began to trend down, why didn't you trade options or short?
Honestly, I just knew that my skill set wasn't where it needed to be, and I made the decision not to take on the additional risk.
Explain what you mean by additional risk.
Well, let's look at the fact that when you go long or buy a stock, you have the choice to hold on to that position until it returns to break even or you make a profit on it.
So how's that different from options or short?
Well, with options, you can actually lose the entire amount invested, which would only happen in stocks if the company went out of business. However, with shorting, if you aren't careful, you can actually blow up your account and end up in a margin call.
Got it. So you wrapped up Q3 8K short of your quarterly target, but you were on track for your full year goal.
That is absolutely correct.
Okay, so where does Sam enter the picture?
Actually, Sam was a stock tip from my husband.
Oh dear.
Let's take a look at an overview from the Yahoo Finance website.
So this summary tells us that as of January 28th, the current price was $426.16. If you take a look at the chart, you'll see that the price has come down since we closed the position in December.
Note that the 52-week high was $1,349. That occurred on April 23rd of 2021. The 52-week low is $406. That occurred actually on January 28th of this year.
Okay, so what was your buying signal?
I decided to jump in when the stock dropped below $1,000 in June. By that time, the stock had been trending downward for 2 months.
Okay, so let's take a look at the 1 year chart. We all know that hindsight is 20/20, but looking back can be helpful.
I purchased 20 shares on June 18th and another 20 averaging down on July 14th.
Okay, did you realize that the stock had been trending down for 2 months when you got in?
As a swing trader, I see big drops as opportunities. In the brief time that I'd been trading, I'd seen stocks drop and make a huge comeback, especially the more expensive stocks.
Okay, so what happened next?
Earnings happened. Sam missed their earnings July 21st. Shortly afterward, the stock gapped down to less than $800 a share and kept dropping.
Wife, why didn't you sell?
Honestly, it was ego. I didn't want to take what would have been a $5,000 loss.
Right.
One of the lessons we learn in trading is to have a plan before you trade. That means that before you ever place the trade, you should know what your entry and exit points are going to be, win or lose.
What happened to the plan?
What happened was, instead of creating a plan and sticking to it, I just kept hoping that Sam would turn around. Okay, I know I am not alone. Trade cousins, if you have ever experienced the pain of trading without a plan, please drop a comment below.
Okay, the wife, so you decided in December to take a $15,000 loss. What have you learned from this experience?
Well, first of all, I learned that if I had placed a stop loss the way that we are taught to in the trade and travel course, this loss could have been so much smaller.
Okay, I get it. But your strategy was working, so what changed?
Well, I was not familiar with Sam as a stock. Then I did not trade it in the simulator. Had I taken a few weeks to practice trading the stock and observe the way it moved, I might have seen that it was going down faster, and maybe I wouldn't have made the purchase. Or if I had made the purchase, at least I would have gotten in at a much better price.
Looking back, were there other factors involved?
Definitely. I used the 2020 stock market as a barometer for my decision-making process.
Explain what you mean by that.
In March of 2020, the stock market dropped like a rock. It then began to turn around and took off like a rocket. This was not a normal trading market.
Right. Okay, you mentioned ego earlier. How big a role does mindset have in trading?
I believe mindset is huge. I know that historically the stock market trends upward, and that optimistic outlook actually led me to hold on to a position longer than I should have.
Cool. So have you changed your outlook?
Well, while market conditions are certainly a factor, as an income trader, I understand that it is best to take small losses early. The truth is, you can always buy back into the position at a better price.
Make sure you check out our full year results.
Got questions? Drop them in the comments below.
See you in the next video.